Hello everybody, this is Kobus Kemp from SA Forex Trading, and this video is to show you why I am still a dollar bull. We're going to look at some charts, we're going to look at the US economy, and we're going to look at what is happening globally. So firstly, the disclaimer: trading Forex has a level of risk and may not be suitable for all investors. This video is for educational purposes only, and no setup given should be seen as a recommendation. Now, very sadly, in the past week, I have learned that many of the training schools in South Africa, they are stealing my concepts or distributing my concept as their own ideas. Suddenly, it stuck its ugly head out. So I'm doing this video. I'm going to give you the analysis for free so that you can know how did I get to this conclusion, or this technical analysis that the dollar is still bullish. And I hope this video serves you well. Looking at the dollar chart now, unfortunately many guys' charts look like this. When they get here, that is all that I see. Indicators, indicators, indicators. The first thing and the first step, guys, that you can teach yourself is to delete all of this. Very good selling opportunity if it comes to selling training courses. Not very good in trading. So there you are. Now you can see what is happening on the chart, and now you can analyze what is happening. This is the dollar index. This is a weekly chart, and I want to show you how I get to this decision to still buy dollars. And we're going to look also fundamentally what is going on. So first step of all, I know the wave principle from here is telling us that we are still in a correction. And as we now can label these wave counts, this is what I'm teaching in my training courses all across the country in South Africa, is to analyze the chart, what is happening with price action, what is happening with the trend, and then to take your opportunities according to what's happening on the chart. If you use the channeling method, you can connect 1 and 3 and you just copy it to the bottom, and you can see an area where wave 4 should bounce. Now you can zoom in and see this is a weekly reversal candlestick. If you then put your Fibonacci tool in from top to bottom, you can see that this market bounced on the 38.2%. So incorrect. The fib zone is not the 618. The market will not get back to the 618 each and every time. This is why there is a 50% and a 38.2%, because sometimes you must just know when the market will bounce on the 38.2%. So I just want to make that clear. Now, going forward, I can see this market is rallying, it's going up, and if I label this wave count, I can see a wave 1 and 2. I can see up there a wave 4, 3, and a pullback to wave 4, and that wave 4 bounced on an upward trend line. So you don't need indicators to draw in a trend line, guys. You can just draw in the trend line, zoom in a little bit. We can see this bullish engulfing candle on a weekly chart, and we can now see that that was at past resistance, future support. As long as this support is holding, the dollar index will not come down. It will rally because it's still in a bullish trend. This trend is still very much intact. And if you connect those highs, you can clearly see that it's the backside of this downward trend line, which is just a bullish flag that broke out higher. Weekly reversal candlestick with a bullish engulfing candle. If you go down to a daily, you can see the exhaustion gap here. On the Monday, the reversal came, and then the market starts to rally. If you also put in your Fibonacci tool from top to bottom, this swing low here, you can see that it's a 50% bounce. So again, not the 618, it's not the fib zone. It is first a 38.2% bounce for a wave 4, and now this is a 50% of a wave 4. This market is starting to rally, meaning that the dollar will rally as well. Why fundamentally will the dollar rally? I also teach this in my training courses. You can't just trade technically. You must look at the chart only. You must look at the fundamentals as well. a few weeks ago or a few days ago, the Federal Reserve Bank said that they're going to increase rates, and they did. We knew that they're going to increase rates. We looked at the CPI numbers or the inflation numbers, and we knew that they will increase rates, and they said they're going to increase rates even more in the next coming year or two. So that is a dollar bullish effect. If you can look at the Treasury yield, you can look at the yields or the Treasury bonds. You can see when the dollar index is rallying or the dollar is going up, appreciating, the Treasury yield or the bond is coming down. The yield is going up with the dollar, but the bonds are coming down. This is the 30-year Treasury bonds. We can see this is an overlapping wave. That is a concept that you must understand. It's a correction. I do feel that Treasury bonds will still go lower. The yield will go higher and the US dollar index will go higher. So that is it, guys. I hope you learned a little bit of how the economy works, how trading works, and then obviously when to trade these opportunities. That is what you must get trained on. So go to my page, SA Forex Trading. This is the page. You will see and scroll down. There's a lot of ideas that I put up here for free. There is some videos. There is what my students say about their performance, what the mentorship will bring to you as service. There's some charts of what is happening on the US dollar rand at the moment. And just scroll down, like the page, and inbox me. Send me your message so I can tell you when is your next training course in your city. Joburg, Durban, and PE, they are next. So happy trading, guys. I hope you've learned a few things on this video. Keep well, everybody.